Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. This is Moving Iron Podcast is brought to you by John Deere. Got Greg Machinery, Pete Peterson on to talk about what's happening in the market. Greg, how you doing?
I'm doing well, Casey. How about you?
Doing good, man. Doing good. How things looking up there for White Christmas?
Oh, I think it's going to be white. We've got some warmer weather on the way in the 40s here, so that'll be well received. But we've been below zero and lots of snow. I think we had 4 or 5 shots of snow here from Thanksgiving, so I think we will have a white Christmas. How about you? You've been warmer down there.
The way things are trending right now, it's supposed to be 68 degrees on Friday. So
wow,
we got a long ways to go. We might have a white Hawaiian Christmas or something like that. I don't know. You throw out some white confetti or something out there.
I'll come down your way. You give me a tea time. We'll go play 18 holes at 68 degrees, man.
There'll be people out playing, I'm sure. Well, this time of year, there's always somebody out doing something on the golf course. As long as the wind doesn't blow. Usually when it gets this time of the year and it gets that warm, the wind blows pretty hard. So,
well, we've talked. When it comes to wind and golf, I feel sad when I play golf without wind. And growing up on the prairie of western Minnesota, wind is your friend. You just have to embrace it. Now, that said, I know you guys get serious wind out where you are.
It's definitely something, and you have to embrace it because that's your only choice. So.
That's true. There's not many options, yes.
For sure. Well, here we are. We got that. This is the kind of like this week and next week are the last real weeks that you see real movement in the marketplace, and it gets quiet, and it usually stays quiet till after, basically, mid-January into February, you start to see some things kind of pick back up. But this is the last real run of that. And Greg, as you watch the auction activity out there, sure hasn't slowed down any. There's still plenty of auction stuff going on. But as you are watching stuff happen right now, what are you seeing out there?
Well, first thing would be the volume. Like you say, it's been, I guess, nutty is one adjective I would put to it. The volume of sales. The number of farm sales has definitely jumped. I mean, through October, we were up 15% raw number of auctions in 25 versus 24, but it's definitely upped through November, December. I've been too busy. I haven't updated the numbers yet, but despite the jump in number of sales, which Econ 101 would tend to tell you, okay, more sales equals watered down buying pool prices would fall. It's been the opposite. Good used equipment has gone up, and it's stayed very strong here. I covered a sale Friday just east of Indianapolis in Markville, Indiana. Great year-end sale by Jeff Boone, Auction and Realty. I thought it was very solid. I stood and watched a New Holland BC 5070 baler go for $27,000. I stood there and watched and filmed H&S GM 170 grinder mixer sell for $21,500. Kubota SVL 97.2 24 model, $62,000, very intense bidding. So yeah, I think prices have been holding very solid. Again, I think on the new side, obviously that's been depressed for a long time. So people are assessing what they need for 26, and what they're wanting is, best quality used. And when it shows up, it's competitive right now.
Yep. And we've seen that all year long. Right, and that's not changed any. And if anything, it's gotten stronger as the years gone on. Going from there, and before we started talking, you were talking to an auctioneer about some stuff, what you saw, and they were having some concerns about the amount of used equipment on the market.
Yeah, and this is something the farm audience, also on the dealer side, I know it's starting to perk up a little bit. And at first glance, it can seem. First blush, it might seem nonsensical, but I had a jockey come up to me at the sale Friday, a guy I've known for many, many years, and very sharp guy, plugged in. And he said, Greg, we're going to have a shortage of good used equipment here in not too long. And that was the second used equipment dealer, the third dealer, auctioneer, jockey that said the same thing to me in the last 2 months, maybe even 6 weeks. And I think it's accurate. And again, I think this is what I started writing about early in 2025 in Farm Journal and top producer magazines to the farm audience is like, the system is so much faster now than it's ever been. And this glut of late model used stuff definitely was there. But 23 and 24, dealers dealt with it in a super aggressive way. And right now, if you drift into that a little bit more age, I think you have some data on this, Casey. You get over 5 to 10 year old, that really nice stuff. That's why we're seeing these auction prices go up, because it's very, there just isn't an ocean of it out there like people assume there would be if they think of past downturns in the rearview mirror. But the system is different now for many reasons. There's fewer dealers. They're much more aggressive. The whole online thing has changed everything. So, yeah, people got to be aware of what's coming, I think.
Yeah. Well, I think to your point, if you look up here at the 1-year-old stuff, if you go back 3 years and you look at 1-year-old stuff, where it was at, it was probably, it wasn't, that 4,300 would have been easily 6,000-ish, 5,000-ish machines up there in that one too. And this model, this chart we're looking at here, that's all make, all models for everything that's out there. But if you're looking at 1-year-old machines here, those are 25 model machines that are out there right now. So that's what I have for 1-year-old machines. Right. 1 season to use type of stuff. And really that cake's kind of baked right now when you start looking at that, because the way, those deals are done and those things are being advertised, the overwhelming majority of those machines that you see out there, those 1-year-old machines, are being advertised, even though the machine's not physically there on the lot yet. They've made the deal. They've ordered the new machine. It's coming in. So if you look at 300 plus horsepower machines, and that's everything from a 300 horsepower machine all the way out to an 830 horsepower machine. That's a lot of models in there where there's not a lot of stuff going. Jump down, look at 2-year-old machines. There's 2,400 of them. Mm-hmm. But if you go back to look at this a little bit, a 3 to 5-year-old machine across the spectrum here, this resembles a lot of what you saw happen in 2012, 13, 14, right? Those 12 model, 13 model, 14 model machines coming out of the last downturn, that was a big slug of those. If you started looking at that 3 to 5-year-old machine back then, that's exactly what you saw right there. Where a lot of auctioneers and jockeys and stuff like that are talking about is the 6 to 10-year-old stuff. And that's the stuff we've been talking about when you're looking at your auction stuff, is that the majority of the stuff you see sell at auction is between that 6 to 10-year-old stuff. There's 1 and 2-year-old stuff, 3 to 5-year-old stuff for sure. But the biggest chunk of that stuff that you see sell at auction and jockeys kind of go back and forth with is that 6 to 10-year-old stuff. And there's not a lot of it out there across the board. You kind of run down the list and look at that. Same with that 10-plus-year-old stuff. And you start looking through that. Where I'm looking at this as you start looking at 26 EOPs or order writing periods, those kind of things are going to start firing up for 27 delivery. These 1-year-old machines aren't going to grow a whole lot. They're going to become 2-year-old machines. And a similar number of 1-year-old machines, 26 model stuff, is going to start coming back into the mix as we start working through these deals again. And when things fire back up, which I don't think we're that far away from things really turning, Greg. I think we're going to see some turn in the marketplace, so we're going to see some things move. But this 3 to 5-year-old stuff across the spectrum is going to be where I think a lot of the activity is going to take place. And you start looking at those. So you're talking about $350,000, row crop tractors. You're seeing some $350,000 to $400,000 combines, like those kind of that, for lack of a better term, cheaper stuff out there that more people are going to be interested in. Is going to fall into that mix. And as these things roll through, a big chunk of that's going to come through. You start filtering that stuff back down into this 6 to 10 and that 10-plus-year-old stuff as those trades start coming in on those 3 to 5-year-old machines. It could spur that market up a little bit, but the top end of the funnel, there's not going to be a lot up there to backfill. And I think that's going to be that's where, if there's any silver lining in what we've seen happen over the last couple of years here, Greg, is that top end of that funnel isn't going to be so full and putting a ton of pressure on the market. There's going to be a lot more activity on that $400,000 and less machinery out there that we see in the marketplace.
Yeah, I agree. I agree completely, Casey. I think, on the one hand, I've been saying almost my whole, 3.5 decades that, to me, the best buys, tractors and combines in particular, and same with sprayers and planters and big stuff, is in that, I always would say, 3 to 7-year-old range. And it's interesting, the data you've got highlighted in red there, that shouts it because there's more of them. And what people want, like you said, is that 6 plus the 10-year-old stuff. And that's what the jockeys are coming up to me like, Greg, we're going to run out of this stuff. So now at the top of the funnel, when you already got low numbers, 1, 2-year-old stuff, play this forward 2, 3, 4 years for. And that's what I've been in the farmer's ear, like, you better be careful here because past assumptions are out the window on how, the used equipment market and valuations perform. Because again, this data, this raw data here, compare this, Casey, with the stats I had just a bit ago where I said the number of items 0 to 3-year-olds sold at auction last year was up 155% versus 23, and it was up 155% versus 2014. So dealers and manufacturers working together have been much more aggressive about paring down that top end of the funnel and getting that out. And so even with the increase in the number of farm auctions, but selling, a lot of 1 year, 2-year-old stuff down through 10-plus-year-old, valuations are getting stronger. So this used market it's really, again, whenever corn and beans kind of move higher and stick, I think we're looking square at 2021 again, when it's a supply issue. There's
Right.
just not going to be there for people. And then guess what? Guess what's going to happen to prices?
Oh yeah.
It's going to be what it was then.
Oh yeah, for sure. I'll go right back to it. So I'm just kind of putting this up here real quick, just for some quick math on what everything looks like. But if you take, so right now in North America, there's about 6,750-ish total locations across every spectrum, right? John Deere, everybody. That's how many total ag locations that are out on the marketplace right now. And if you take a look at where that kind of comes to play as a comparative to total amount of equipment out there. Oops. Oh, dang it. I gotta do this right here.
Wrestling with spreadsheets. You're better than I am, Casey.
Gotta love it, right? Can't get enough of it.
I'm kind of a chicken scratch. I take all our data and then I chicken scratch out the data trends. But no, spreadsheets are amazing. And it's powerful stuff you can do with them.
Yep. So this right here, this what I put in here, this 1.77, that's how many 300 plus horsepower tractors per location are on the marketplace, right? And granted, there's 11,000, 12,000 machines out there, so there's plenty of machines out there to be had. But the point of this, if you take a look at the 1 and 2-year-old machines out there and you divide that by 6,700, there's hardly, that would be like 10% of the locations would have a tractor on it, right? So that's, as you start kind of looking that back, there's what opportunities out there that you're going to start seeing this thing. And the reason for it is because the top end is not so full, which is going to put, that's what in the auction marketplace, when you see these downturns like this, the reason you see such a big spread in the overall functionality of everything that's going on is because of the top end of the funnel is always so full. There's not enough buyers that come in and buy it. Well, that's going to kind of flip around a little bit to where the bottom end of it's going to be full. Definitely more buyers down there. But as a percentage, you're going to see more movement down there, which is going to kind of keep feeding the auction marketplace. But it's not going to give that the catastrophic slide that we saw, because you're not talking about $600,000, $900,000, $800,000 somethings. You're talking about $250,000, $300,000, $100,000, $125,000. That's a different marketplace, different mindset, different approach to buying and selling equipment than on the top end of that marketplace.
Yeah, I mean, my anecdotal way of saying it would be the period of blood in the water is way shorter now than it used to be in terms of dealers having to move that top end stuff. So 24, I mean, the percent drop in auction pricing was the exact same as we saw in end of 13, 14, 15. But the difference was back then it took 3 years of blood in the water for the system to work its way out of it. This time around, it took 1 year.
Yeah.
And now you just showed that data, the raw number of units 1 year old out there. I mean, that's just This is why if you pull back, it depends on how you're looking at this. Are you a farmer? Are you a dealer? Or then I deal with folks too, and you do as well, that are investors,
Right.
Trying to figure out, what's the positioning for John Deere stock or Caterpillar or Case, whatever. To me, when you look at what we just talked about in that data, it's like the system, the holistic farm equipment system, new and used, is functioning better, more efficiently than I've ever seen it by a huge extent.
Yeah.
So even with all the pressure in agriculture right now, profitability, it's tough. But the system is set up to perform better. So ag has always been super cyclical, but we've always had these overhangs. So when, corn and beans went up, cool. You still had an overhang.
Right.
And last year, the term I heard on the dealer side was, we got to get ahead of this. We got to get ahead of it. And I'd never seen before that mentality, frankly, get to the manufacturer level, where the manufacturer was like, oh, okay. And you can tell me if I'm wrong. I never sat in the dealer chair like you did, but it seemed to me like last year manufacturers were like, okay, we hear you, we feel your pain. And these larger dealers were saying, you know what? We're not focused on selling new. We're paying 8% interest on all this stuff on all our lots. We're going to move this stuff.
Yep.
And the manufacturer said, we got you, we hear you. And to see that level of cooperation, so to speak, was, if I'm looking at investing in this area, it's like, that's a huge improvement over a decade ago, that downturn we saw. Because there was so much, we talked about a couple weeks ago, that ocean of equipment that nobody saw that was being leased out in 2015. It's not there now. So it's just more efficient. And so that is a good thing. Now, it's a bad thing if you're a farmer expecting and wanting great deals on the used market. And again, I think the auction prices here we're seeing in November, December have surprised a lot of people. Wow, they're actually going up. It's like, yes, they're going up, but a big part of that is that raw data on the supply side that you just highlighted.
Yep. And that's going to continue to drive the marketplace, right? And it's going to tell that story. And, knock on wood, we don't see a huge swing in the marketplace when things really get good again. Because typically when things get good again, you see this huge swing back where, they go out and buy a bunch of new stuff and get things going. But I think this time, just because of the entry level into that area, is going to be, it's going to be a pretty big movement for some folks to do that, right? And it's going to be a majority of them, and I think that's going to limit the amount of new buyers, which then is going to feed the used equipment marketplace, which is going to, I've talked about my whole career about the used equipment ecosystem, that when one of those animals don't show up to the watering hole to get ate by the crocodile, things get out of whack pretty quick.
They're always been connected. Yeah. And what I'll be interested this time around, Casey, is this downturn is stretched out long enough on the grain side, and the price of new has got so high that I've never heard this collective level of farmer chatter reassessing, whether it was roll programs, mud, whatever. It's like we bought a lot of new equipment for a lot of years, and do we want to do that going forward? Right now, I'm starting to sense like maybe we want to roll differently. Now, that's one thing to think it, but you got your acres to farm. You need reliable equipment.
For sure.
And now, as we start to see that data you just showed, it's like, oh, well, wait a sec. How many one-year-old units are out there? So even if I don't want to buy new, I got to be under warranty, and I've been stretching my line out. It's getting aged. So in other words, it's kind of setting up, and this is for the investor people, it's like, even though farmers don't maybe want to buy new, it's like, you got to farm the ground there. And if the used, at some point, the used can get too high, where then again, the value becomes, and in fact, I remember writing about that in 21 and 2. It was like, you know what? These auction prices are so high. Your play is to get new if you can, get it under warranty.
Yeah.
And you can see where if you're a manufacturer, the data is lining up in a way where it would make you smile.
Yeah.
Now,
For sure.
again, that's the way I'm seeing it.
Yeah, for sure. For sure.
And I guess the other thing on the farmer side is got to be careful if you're selling something private. You really got to be aware of what's happening with these values. Now, you never want to come in and ask way too much because you don't get any heat and momentum, and your listing just sits there. But at the same time, don't be where your head was early in late 24, early 25, because things have strengthened since then. And that's, in essence, why I've put out this auction price data, and it's free to look at for all 3.5 decades so that you can look at this stuff. And again, if you were wondering what a 2-year-old, whatever is going for with 1,000, 1,200 hours on it, it's like, don't guess. Just look and see what people just paid for it like 2 weeks ago.
Right.
So then you can price accordingly. And right now, the price is a little up.
Yeah, and I think it's going to continue. I think this is kind of, I don't want to say it's ushering in the new normal because I'm not ready to say that yet. But what I'm going to say is that this is going to further stabilize the used equipment marketplace, which is good for everybody, man. It's going to mean you talk about balance sheets, you talk about all the other stuff that's going on. As this used equipment stabilizes, things are going to get more stable. But I will say this. I think one thing is I'm watching this marketplace right now and the speed of which the stuff comes off the market. I'm paying attention to it from the perspective of, because of the price of equipment to where it's at now, how much is that going to prolong trade cycles from what they used to be, right? I used to trade every 2 years I'd get a 1-year-old machine or whatever, whatever the mix was. Is that every 3 years now I'm going to get a 1-year-old machine, or every 4 years I'm going to get a 1-year-old machine? Like, what's that look like, and how are those things going to play into it? Right. That also could have an impact on used equipment space from the perspective of it kind of locks the prices in there because now you've got solid buying groups. And I think that's the other thing about, as I look at the used equipment marketplace now, is that there's, when I first started doing this, it was, people would jump all over the place. I remember in 2008, 2009 timeframe, they would see, a guy would trade a 9600 combine in to buy a brand new 9770, right? You don't see that anymore, right? I've seen someone trade in an S780 to go buy a brand new, S7 800 or whatever the number is now for the combine. You don't see that anymore, but they're kind of locked into that kind of ribbon there where they're kind of having to stay in that little block, and more folks are kind of being that way. So that there's pros and cons to that, right? I mean, the pro is when no one's buying, or the pro is you always have buyers, but the con is when they're not buying, you don't have any buyers, and that's kind of locking those. That's what's going on there. But I feel like if the market feels like, hey, I'm a 3 to 5 year old buyer now. Hey, I'm a 1 to 2 year old buyer. Hey, I'm a 6 to 10 year old buyer, and that's kind of where I'm living at. And I'm not going to go up or down from that. I can't go backwards, right? Because I'm just buying the same thing that I've got. But I can go forward a little bit and still make it work.
Yeah, I agree. I think it's interesting when you get these periods of extended up or down, or particularly down, is when that mindset collectively, whether we saw it on the dealer side a decade ago when dealers, they were under this huge overhang. You were sitting in the used manager chair, and it was like, wow, we're never going to get in this spot again. We're not going to let this happen. And then, times get good and it starts flowing, and you got to have market share and all that stuff. But dealers have changed how they act, which we just saw last year. Now farmers are starting to verbalize, okay, it's one thing to think you're going to change, but will you do it? I don't know. I think farmers are very savvy. They're paying attention to valuations and looking at the age ranges like you had up there. What's my 3 to 5 year old value versus 1 year old versus new versus 10 year old? So in essence, that supply thing you were talking about there, Casey, where probably, those folks who always look to buy that 10 plus year old stuff, that's increasing pressure there because those values, that's been in the sweet spot of going up. Now, very, very extreme example, but as you and I are talking here, one of the items I'm watching on the auction market today is our friends out at Ulmer Auction Service in Ashley, North Dakota. They are selling a 2007 Peterbilt 379. Now, granted, it's a unicorn. It's got 20,817 miles on it. One owner always shed it. So, okay, you know it's going to be hot. And it was a limited edition, by the way, whatever that limited edition, that 379. But the bid, when I hopped on the recording, was up to $215,100 on a 07. So you're talking that 18-year-old earlier emission. And I posted on our social media yesterday, and, half of the people, that is the stupidest thing I've ever heard in my life. Why would where two fools meet, that whole thing? The other half go, no. Because what's a new one cost? And this is the engine we want. And it's got the history, and that's just what it's worth. Doesn't matter if you like it or not, but it's going to go north of $215,000. And so if you live in that, I always want to buy the nicest 10-plus-year-old stuff. Maybe people coming back down the chain who were looking for 5-year-old stuff, and they're like, oh, that's just too expensive. Well, maybe that's what's happening. Maybe that's why all this 10-plus-year-old stuff is even going up further right now, because it's just shaking down that way. I don't know. It'll be interesting to see what happens. But you are right. What's the new and used are always connected, and they always will be. So
always will be.
Fascinating to track.
For sure. All right, Greg, good place to stop. Folks want you to come out to their auction or speak at an event. Easiest way to do that, to hit you up on social media or go to machinerypete.com.
Exactly. Yep. Next one I'm going to, I'll be out in Windsor, Virginia on Saturday, the 20th. Come on out, folks. We'll film for the TV show. It's Rich and Rich Auctioneers. I think you know our friend Bryant Roberson.
Oh, yeah.
With Rich. Bryant's a character, great guy. And beautiful line of equipment. Two brothers in their 80s. And Bryant was teasing me. He said, Pete, we got to get you to come down to this sale. He goes, I got two older brothers. He goes, one of the brothers loves you, loves Machinery Pete. And I was like, Bryant, what does the other brother think? And he said, well, not so much. But it'll be fun. We'll get down there. And they have beautiful line of equipment, John Deere, late model John Deere stuff. So it'll be a great day in Virginia.
Yep. No Bryant well. Known him for a long time. Good guy. So.
And he did ask me to relay something to our friend Aaron about goat farming, I believe, and I lose the translation in there. But he said if you bring that up to Aaron, he know it'll be from Brian. So I just needed to pass that along.
Aaron's a sheep farmer, so he catches a lot of goat farming jokes. So
there you go.
So
all good.
All right, man. Well, Greg, appreciate you being the podcast. We'll catch you again next week.
Sounds great, Casey. Have a good week.
All right, stay tuned for Moving Iron podcast after these minutes.
Well, there they are, mocking you.
See you next year, loser.
That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
All right, welcome back to Moving Iron Podcast. Got Rich Boston on to talk about what's happening in the world of economics. Rich, how you doing today?
Good, and thank you for having me on again.
I love having you on, Rich. I learn something every time we're here. So we've got kind of a weird sense in the market right now, right? So I watch Bloomberg, and they make it sound like it's gumdrops and candy canes every morning when I'm working out in my gym in the morning, but not necessarily gumdrops and candy canes. But they're not necessarily as what's the word I'm looking for here, Rich? They're not nearly as bearish as I am when I look around and see things are happening. And we talk about a lot of stuff. We got retail sales report came out. You got jobs report that came out this week. You have all those things that came out. It's Christmas time, so we're in the middle of the getting back into the black time of the year for the retail sales. So I guess as you're wading through all this data and this information, Rich, what are you seeing right now as far as we head to the end of the year? Yeah,
well, the retail sales this morning, it did show a pickup in November they assume the Christmas season actually starts in October. So in October, it was really unchanged from prior month. November was unchanged. So they're saying, gee, what's going on with our economy? This is supposed to be the Christmas season. Where's the boom here? Well, it turns out the auto sales and the sales at the gas stations were actually down, and enough to wipe out what's really a better than expected everything else type retail sales number. That was up 0.5% for the month of October, when the pollsters were expecting 0.4. So it was better than they were expecting, but it was offset more than they were expecting when you throw in the autos and the gasoline stations. So on balance, people at first said, well, this is good retail sales, because they were looking at that without the autos. It's interesting how you watch these, like you were discussing on Bloomberg, of how they behave. This morning, especially when the jobs report come out and the retail sales, they were getting all excited while they're talking live as it's happening. And the market's going up and they're getting excited. Well, it only went up for about 5 minutes. It starts down. And pretty soon you could just see the same reporters and analysts are changing their minds, saying, well, you do know that you get reports like this and it can jump and then come back down, you know. And you could just say, I thought to myself, boy, by the end of the day, you people are going to be negative. So, and that's the way it is with the stock market. It's actually down right at this moment here. So they like the jobs, they like the retail sales, but the market is telling us a different story. It's saying, this isn't exciting enough, folks. We got issues, we got problems. But overall, I think most analysts would say we were okay on the retail sales. But what's concerning is retail sales is calculated on not adjusting for inflation. So how much of that did we spend that was because of raising of prices? So with this K economy, I'm convinced the middle class poor actually are buying a little less for Christmas, near year end, and they're paying more for it. And then I think it's the rich who are buying more and paying more for it, and they throw it in all in one basket, and it says we're doing pretty good or okay. And, to me, looking at the population, however, you get an entirely different picture. Okay.
Yeah.
There people aren't happy. All right. But that's where we're at for the retail sales. And frankly, I think we're going to see soft retail sales during the first quarter of next year.
Okay. Right on. So we were talking before we got started, and you want to hit a little more on the jobs market or the jobs report?
Let's
you
go
get there.
with the jobs
Okay.
market.
All right. Jobs
For a
market.
lot of people, it's probably more important. For November, they came out with 64,000 jobs created when the pollsters were expecting 50,000. So they got all happy-dappy the first minute of that, and the stock market started going up. But they then showed a revision for October where we lost 105,000 jobs. And we've been seeing this all year long. We get excited, and then we see the prior month being revised lower. We're just not making jobs this year. And it's getting worse from June to now. And yesterday there was a poll out on one of the big major media companies for Wall Street that said the CEOs really don't see a good time next year, business-wise, which is contradictory because most of the analysts were forecasting all these wonderful profits all this year, and we did get them. And they're forecasting next year to be just as good. But we're starting to see some cracks where some of these analysts are coming out saying, well, maybe we're spending too much for this AI. Maybe it's gone way too far, too fast. So it's going to be interesting. I think this is going to be a shift. 2026 is going to be a shift year where suddenly some of these analysts are going to be pulling back saying, we don't see as good of profits as what we thought we would for 2026. Other on the jobs is the unemployment. That jumped to 4.6% versus 4.4% the month prior. That's a pretty good jump from month to month. Normally we expect 1, okay? And it fits with my forecast all year long that we're going to see more and more unemployment. Well, some of that was an easy thing to forecast because of the cut of the federal jobs. But also keep in mind those people have to work somewhere, so they would shift over to the private sector, yet we're still rising unemployment anyway, so there's a lag there. Some of these people aren't finding the jobs. And we're learning for those around in their 20s, 24, 27, some of these Gen Zers coming out of college, even some millennials, I suppose, coming out with their MBAs and where they're hopeful to get that $200,000 job right out of the window. They're finding it extremely difficult. I know some personally, and boy, they sound like they need to go to a therapist. They are depressed. They are just not finding the jobs there that they would expect after putting all that time and money into that greater education to get involved into, business type jobs. Now we also have the pay, and the pay for October was up 0.1% when the pollsters expected 0.3%. So that was a big disappointment. So the pay raises are just about gone, okay? And we've lost some jobs and not creating jobs fast enough. The job environment is still rather tight, actually, interesting enough. But what's concerning me is I think some of these companies that were rather optimistic, they were very discouraged at the beginning of the year and then improved a little bit later in the year. I think they've still been holding back. They've been holding back all year long in terms of expanding businesses and giving pay raises. And I think they're concerned they got another year where they need to be careful. What are they going to do? And then we got the midterm elections next year, and normally business will back off a few months before a significant election just to see what's going on. Do they need to make changes? How do they want to invest and spend money? So that was the jobs report today, and it's interesting here again. We had as soon as that numbers come out, I was watching these reporters live on Bloomberg, and they just seemed optimistic, but 2 minutes later, they're not so optimistic. Yeah. We got that split K type economy here, but there's also a split when some of these Wall Streeters, bankers, are really more focused on inflation and concerned with rising inflation later, so they didn't seem to care all that much about these jobs numbers, while we had others who are more focused on the jobs that you would have thought they would have turned negative right off the bat as seeing losing jobs and therefore a weakening economy. Instead, they looked at it, well, the Federal Reserve will give us even more rate cuts next year, and that's going to save us. But then a few minutes later, they turn around saying, yeah, but that's going to take some time to work. Well, maybe it isn't so good today.
Right. Yeah. Yeah.
So that's the jobs arena. Okay. It's a bit of a circus. So.
Yep. Well, I remember. So right before we started recording, we were talking about what we were going to talk about, and we were talking about crude oil. Crude oil is, technically it's broken down now. It's broken out to the downside, and everyone's worried about supply and the economy and those kind of things. And I don't remember the last time. I can't think of the last time when the oil industry was worried about supply, the available supply on the market right now. And I was racking my brain about it. I got to go all the way back to the Great Recession, 2008, 2009, 2010 timeframe of really the last time you had a conversation like that. Because really since then, it's kind of bounced back around between, right around $100 down to about $70. And it's kind of stayed in that range over the last 25 years, right? And watching it kind of roll its way through 20 years, kind of roll its way through. But here we sit like this, and if you watch the oil market over the last 3 years, basically, it's kind of stayed in a $10 range, and it's kind of been in that going between 60, stay in the 60s for a while, roll up to 70s, kind of touch 80, then kind of roll back down to the high 50s, and then kind of roll its way back up. Well, here lately, it's been staying in those 50s, and it's not been able to break out of that. And just like you talked about earlier, you're seeing that it's really breaking out to the downside of that now. So I guess, Rich, as you're looking at the oil market, what are your thoughts?
Yeah, it's down to like $55 in the futures. I'm not sure where the cash is right now. But if it goes down to $54, that's breaking out of a range I've had for, seems like 5 years now. I've never changed it. I put it on a chart, left it alone. It's worked very good as a bottom. It comes down in this little green range, and then it goes up. And we're on the bottom end of that. But some people, my chart is out there and all over the world, apparently, according to some people. I hope they realize that was just a green bar to show us when it's now getting too cheap. That green bar could go to zero for all I know, okay? It's just a starting point. So I hope they don't think it must hold at 54, 55, because no, it doesn't. And I'm even concerned as low as $45, another $10 lower here. And during recessions, it's not difficult to knock oil down to $35, $26. That's the way it's been in recent decades. Now, it may be different today and some of the supply demand things. So all it's telling us is it's really cheap. It really should go higher, but there's no reason to go higher fundamentally right now. You just cannot make a case for it. And I do think crude oil is improved over the past 10 years compared to the past 50, 60 years of a better economic indicator than what it had been. It's still a small, minor. My model uses it for the stock market economy, but it's a small thing. But it's a little better. And I realize you could make an argument there's only one story for oil, and that's just simply too much oil. But the thing is, it kind of reflects the economy in a sense. I've noticed when you come out with jobs reports like this, they sell oil if we lost a bunch of jobs. Well, why are they doing that? Because they're concerned their customers are going to back off on gasoline. Therefore, they better lower the price so that consumer can afford to keep. In other words, they want to move the volume. It's not so much about the price. They want to keep that volume up. They can't afford to lose the volume. And I think the recent OPEC meeting did discuss the possibility of not dropping or not adding more oil production. So maybe they're starting to change their attitude now. And that wouldn't surprise me in coming months. They will try to back off the production a little bit, try to stabilize this. They don't really want to go any lower than this. Economic wise, they really do need $50-$60. But, you can just see that I do think that we need to view that as an economic indicator that I think, and I'm concerned oil goes lower into the first quarter next year. And I think it's going to coincide with some economic factors as well. So at least the people like at Saudi Arabia and those big nations, I mean, they watch the economies too, right? And try to figure out what's going to happen at the gas pump. How does that come back to refinery? Or how does that come back to the pump, the well, Right. And they're far more better at it than they were 40 years ago. Well, I first started trading crude oil probably 40 years ago, and I was kind of fascinated to me that the oil industry didn't seem to know anything about what's going on in the world. Today, they monitor the world every minute, 24 hours a day. They got people on trading desks that just watch everything, right? So even I'm getting a little nervous that, this might be one of those times to look at crude oil as also an economic clue that it's not just about having too much oil. And there is too much oil.
Yeah. That's, it's funny. Do you know where we're at on the strategic reserve and replenishing that? Have you seen anything?
No, I don't. I'm behind that, and I was just thinking of that before I come on, getting on the show here. We would look at these and say, why isn't the government, loading up on oil? But I wonder. I've always felt a lot of people Americans didn't like the idea we're storing oil, that they felt like it wasn't enough to make a difference. That's not just true. It really did influence Biden, put it to use there to help crack inflation, but it wasn't the primary driver. It wasn't that big a deal. But I'm starting to think with all this alternative energy, I'm not so sure we do need a strategic reserve. But if we are going to do it, I mean, these are the prices to do it, right?
Right. Yeah.
Start rebuilding it. But I don't know if the government, but I wouldn't be surprised the government is saying we don't have to really rebuild that the way we once did. Another way of looking at it, though, people would say, well, you really don't store enough to make an impact, which wasn't entirely fair or true. But at these price levels and with the idea we're losing some demand for oil because of all these alternative energies, if we go put that strategic reserve back where it once was, it can make a bigger impact in the future of protecting us.
Right. Yeah.
So there's another way of looking at it. But yes, I'm behind on that. I don't know if they're buying, but I think somebody better make a decision. Are we keeping this or not? And if not, I'm willing to gamble now. I never thought I would, but I'm willing to gamble saying maybe we don't need it. But if we're going to do it, these are good price levels because something has to happen later this decade. That's just how free markets work,
Yeah.
It's cheap enough, something's going to put it back up someday.
Cheap prices is the cure to cheap prices. What cure to cheap prices is cheap prices, right?
Yes.
Yep.
Yes.
Yep. Okay. All right. Let's talk a little bit about the economy. As you look at this, Rich, we've talked a lot about this since you've been on here. You've talked about, going to the next end of this decade. You're very bullish about what you saw happening. You're very, very optimistic. And as you're looking into the 2030s, you see some pretty big hiccups coming our way. So I guess talk a little bit about what you're seeing here currently, right? Like in this current time frame we're looking at, and then what do you see happening in 26, 27 time frame?
Yeah, I still see rising risk of higher inflation in 2026. I say latter half 26 now. Chairman Powell at the Fed Reserve had it different than I. He thought we might see rising inflation early in 26, then down. Well, eventually we'll see down because we'll probably raise the rates. But I'm concerned with Trump putting his people in there. There can be a delayed reaction, keep interest rates too low for too long, allows inflation to surge more like the late 1970s when we had two large surges. And then they'll get on track and knock it down. But they could be delayed and cause a lot of problems for everyone, rich, middle class, poor. Nobody likes to pay more if they don't have to. So that could be a real issue yet, and I think it would cause problems for the stock market latter half next year. So I'm feeling a little nervous about that. We may see the highest price in the stock market by summer even. GDP can actually grow regardless of whatever inflation does. So I'm trying to be optimistic. Economy continues to move forward here, but I don't see any great GDP coming in 2026. The stock market can actually do quite well with a low GDP. It just depends. Is there enough available money? Where's the interest rate at? And are the companies making money? I mean, for the stock market, it's always other companies making money. And they've done that for now, and we have AI. But this AI business, man, these companies are just insane of what they're spending. I mean, there's companies out there borrowing $300 or $400 million and spending on that AI. And you can start seeing it's making the stock market nervous. I forget one of the big companies, like might have been Meta or Facebook, come out and said they're spending X amount. The stock went down immediately. Now, you would have thought if they're investing in something great, the investor would say, this is wonderful. No, the investor's saying, you need to save some money for us as an investor, and you're going into more and more debt. What if this doesn't pay off? And this AI stuff, people are already getting laid off. I think it's going to get worse next year. And the AI can kind of cover that up because some of these companies can make a buck out of it. But I think we're way ahead of ourselves. There's just too much debt that can take away from the profits we're going to get. I'm concerned these AI stocks have dialed in all the money they're going to make for the rest of this decade. And it's already here, which makes those stocks high price. And that's what's happening in the last week or two. Just last week, Edgar Denny come out. He's been bullish high-tech AI for 15 years. And I understood he was going to be bullish a few more years. He thought we were in the 1920s, 1990s, more so 1920s. And he just abruptly last week said he's out. He'd rather be in other stocks than AI and some of the high tech. And if you look at the chart, it started going down about time Ed was on TV, right? And I've reached the same conclusion that a lot of this AI stuff has been really overdone. I'm not saying it can't have a couple of more years, but that's about all I'm going to give it, at least for the stocks of AI. And the higher we put it, I think the bigger the fallout when, yes, we can have a 1929 crash. I seriously doubt it would be that serious. We have enough mechanisms, money printing machines and market makers and the Federal Reserve. There's no reason to put the stock market down more than 50% forever, in my opinion, if we can leave the system alone the way it's working now. But without that system, oh, yes, we can repeat history in 1932 when the Dow Jones Industrial was down 89%. Okay. Yeah. So don't mess with our system. Because it is providing a safety net, even if you don't like the Federal Reserve and don't like how we print money, it really is protecting ourselves from ourselves.
Yeah.
So I think there's a lot of iffiness here where back in 2020, I called the bottom 2 days after bottom. I said, I'm going to be bullish for this whole decade probably. And I want the S&P 500 to 6,800 to 8,500 and maybe 10,500 with AI and another 1920s blow off kind of thing. But over time, I don't think we're going to see 8,000, 8,500 the rest of this decade, especially during the Trump term. Recently, the stock market, the S&P 500, just went above 6,800. So I had a little celebration in my office, popped the champagne cork. Hey, a forecast I made back in 2000s here. It's correct. But people assumed I was going to be really optimistic. I'm not. And I really like Bank of America's forecast. I've been saying maybe 7147 to 7400s here this next year, a little later in the decade. Bank of America come out in around 7100s. Worst case scenario can crash to 5500. Best bullish scenario goes over 8,000. It was interesting. They're picking a lot of the numbers I have. And they're not the only ones. There was about 8 Wall Street firms, banker type firms, and they were all from 7,100 to about 8,500, 8,000, something like that. But the average really only showed about a 5.8% increase for 2026, which suggests those lower targets are probably a little more conservative, level-headed right now. So I think we got limited upside, and I do think we're increasing the risk of some serious declines in coming years. And I mean, in 2027, I think we'll be down 20, 25, 35%. If it's the once-a-decade sell signal, we'll be down 35 to 60%. Now, that once-a-decade sell signal was slated for 2028 to 2031, But when Trump came in, the more I looked at what they're trying to do here economically, I realized we've got to allow a year earlier for that once a decade sell signal means 27. But I've since learned it might be that the market's over and done with as soon as the fourth quarter of 2026. So I don't want to scare everybody for that kind of a serious bearishness, because there's many other things that can delay it all the way to 2030. But it's there. I mean, this is different than what most of the decades going back into the 1800s that we would deal with. And so I'm bullish, but I'm going to try to be quick and nimble and not be quite as greedy as I've been in the past, just because something can come in overnight and break our system, and we're down 25, 35% or something, and maybe worse. But at the moment, still a bit optimistic here for 2026 for the economy and the stock market, although I am currently, the members have already been alerted here, and so they've already done what they need to do, but I am pretty much bearish going into early next year for the stock market right now.
Okay. All right. Let's look way down the line here a little bit. There's been a lot of talk, there's a lot of talking heads out there that talk about stuff, and you see some things come across. So you've talked about 2030 and some of the stuff that you see happening there. But I keep hearing the word depression keep popping up, and you always hear depression. I mean, that they have people we've been on the verge of depression for my entire life. So if you listen to the talking heads, right? But there seems to be more and more consensus around that deep recession, depression type talk going out of this decade into 2030. And you've talked about it on here before. As you look at that, Rich, what are your thoughts on that? Like, how do you feel about that? What's your overall gut feeling telling you right now?
As far as the amount of downside we get in the stock market, I can't go with that 70, 90%. I mean, again, it was down 89% by 1932. And we got an entirely different system. Now, if we shut the Federal Reserve down, if we ever shut down the money printing system over in the federal government, yeah, all heck can break loose. Okay. But we do have a safety net there that I just don't see the sense in that it just should not happen. Therefore, even on the economy side, I don't see like 30% employment. I don't see a depression. I realize some people are trying to also connect this with government debt, but you know what we need to worry about? Private debt.
I was going to ask you about that very thing. So
this private debt is getting more and more complicated, where there's a lot of almost companies that are acting like banks, but they're not called bankers and they're not regulated like bankers. And man, they could have serious unknown loan problems that could then cause a problem for the actual banking system and problems for the Federal Reserve. So those things can really blow up. I'm not worried about the $38 trillion federal debt. That's either not real debt, it's just printed money, or it's a different kind of debt that we never have to pay off, and it still winds up being nothing but printed money that goes into the private sector, into your and my hands. And we can do forensics, actually track this down. We know the 38 trillion is there along with a whole bunch more money. So really the government, you can't, sometimes they say it can print all the money it wants and it'll never go broke. Well, you got to be careful of that. But the point is, that's not the issue. Okay. That's not the thing that's going to crash and burn. It's going to be the private sector. Now, I'm worried if somehow in the history books they do blame government debt, it might just be because it was a chain reaction, that it was the private debt bring down the country that also then caused problems on the federal government side. But I'm not going down the path, this is going to start from the federal government. That's smoke and screens by a lot of people who are just trying to create problems, okay? The real issue is this corporate debt, business debt, the personal people debt. It's just going higher and higher. And we're seeing auto loans, delinquencies going up. Yesterday on Bloomberg, they had a nice article of, I forget what subject, it might have been auto debt after all, but I was thinking of something else. Actually, billionaire Ray Dalio was talking about the number of businesses going bankrupt. And it's mostly small businesses. It's starting to soar. So we see these things before prior recessions, okay? They're not good timing tools on their own. For all I know, the country does well for another 2 or even 3 years. But we know these signs are saying a day of reckoning is coming. And we get, once a decade, we get 20 to 50, 60% down. The stock market is more likely 35, 50, 60% down with a once a decade primary recession. And here's unemployment rising. Okay. We're just seeing all these clues. The day is coming. All right. So, like I say, it looks best to me that we can kind of be optimistic here for 26 or some of it, but you just got to start preparing for something that's going to break loose, and maybe a few years yet. But I just don't see where this goes into a 1930 scenario. There's just too many things we have working for us that are met and designed to protect us from the downside if we don't destroy those things. Okay, in politics, you can see where we don't have the right people there, the right mindset in Washington D.C. right now. They may take some of those things out when we need them. And so I'm not going to say you can't have a depression, but I'm saying probably not. But it won't be a good time, anyways. So, all right.
Yep. So that was a big thing I've been trying to get my head wrapped around, because you hear more and more people. One question I have for you: you've talked about government debt on here before, and how your vision of what that, or your view of what that looks like. Now, if I go back and look at inflationary periods, so right, I mean, when I was a kid growing up, $100 was a lot more than $100 is today as far as what its buying power does. But you could also go all the way back to, the forming of the United States and what $100 was then, and then you fast forward 50 years, again, the same $100 probably wasn't. I mean, it's just never been the same, right? There's always been an inflationary thing all the way through, even when it was backed by gold and other precious metals, and gold and silver and those kind of things. As you look at the situation we're in now, though, like when is, you talk about like Japan and countries like that, where their debt to GDP ratio is like 300%, 500%, all these different big, huge numbers. At what point in time do you start getting worried about that? I mean, the United States is a little bit different because we are the reserve currency in the world. So that's a whole different animal, right? Now, if that ever went away, there'd be a whole different set of rules we'd be playing by. But I guess as you're looking at this, like in your mind, how hard can the United States push that before we run into a big problem?
I think we could print a whole bunch more money yet, Casey. And if we wouldn't give it to the rich the way we're doing in big business, it's unbelievable what we could have. We could have clean streets in every town in America. We can have high-speed trains with the big cities. We can have much better schools, people getting paid more. We can print a lot. And I wouldn't worry about printing money until the U.S. dollar index starts breaking below 75, 70, something like that. Then I might say, okay, we're kind of going too far here, and all we'd really have to do is just back off of that. We don't have to correct it and say, we got to take that money back. And if you look at that, I'm not even sure that's a correct way of looking at it on the dollar index, because all the world is printing money. So you look at currencies, they don't really reflect anymore of when are we getting into those bad times, because they're all doing the same thing. So these currencies are kind of stuck in their historical
that was my next question, right? Everyone's doing it, right? So at what point?
So I guess everyone's doing it. I don't care if it doesn't make sense or not. It's like it can still work anyways. It's just one of those weird things. So I don't worry about that. And these people always hollering, the devaluation. I can remember 20, 30 years ago just getting in the market seriously, buying all these newsletters and these people traveling around the world, and they say, America's going to go in the toilet any day now and, devalue a currency. Casey, we've been devaluing money for 10,000 years, and we're still here.
Exactly. Yeah, that's
so
exactly right.
I don't think there's any limit. I think there's only one direction. You invent a new currency, I don't care what it does. It's going to devalue. You can have short-term periods of bringing it up in value, and you should do that from time to time, corrections. But overall, it devalues. So I'm sure some people are going to have a hard time buying into that. Well, here's the other caveat you have to look at is the inflation. If you're devaluing the currency, but you have long periods of very extended high inflation, you probably do have a problem of devaluing and printing too much money. So to me, especially how I look at printing money in the government, we really just need to monitor what's inflation doing. If inflation is starting to soar, even though I blame capitalism and business far more than I ever used to, that they gouge us too much and it's too easy for them to get away with it, you still can make an argument, well, we printed too much money. But all you got to do is use taxation, or like the Federal Reserve has done since 1980, raise interest rates, which I think is a very poor, outdated kind of way of doing it. But you can still do just that. But you can actually just raise taxes and suck that money right back out of the system, and you can knock that inflation down. And then you just go on from there. You can stabilize the system. And likewise, though, you have to worry when inflation goes minus and you're in a recession, then you have to worry about those depressions. You need to actually print money. Don't even talk about it. Just print it immediately, then talk about it later. Because history shows every time we didn't print the money during bad times, they were worse, okay? And it's very difficult for the American people to get understanding. You always hear this checkbook. Well, the U.S. has to have a balanced checkbook just like I do at home. No. Entirely different system. The worst problems we've had in this country financially is when the government was actually making money and their checkbook had a surplus, okay?
Right.
The lesser problems was when it was balanced, and the least problems, least recessions, were actually negative when the government owed money. They weren't bringing in enough money. So when you see the government sitting on money, they're actually starving the economic system. And so you got to play. We really need to learn to respect this MMT system, just buy into it. 90% of the economists don't buy into it, but the other 10% are getting better and better, proving those 90% are wrong. And I don't think they're ever going to admit to it, but you're going to see them adjust to it and incorporate it. And all we really need to do is be careful that inflation, that if it's rising and the economy's running hot, pull out the money. That's all you got to do. And knock it down and stabilize it, and then we move forward. And then likewise be willing to put the money in there during the bad times. So we really have a wonderful system that actually was created probably in the 1690s in England. Some people argue all the way back to medieval times. Some people it says it's somewhat like going back a few thousand years ago, okay, when they invented money. It's really a really neat system. And that's why I'm not a crypto fan, because crypto is trying to destroy our money system dollar. What I don't understand is whenever there's bad times, these crypto people dump their crypto and they wind up buying dollars. Why do they do that? If it was bad, it seems like they would hang on to their crypto. Well, the thing is, we have to recognize this crypto is nothing more than reinventing what we had before we had our centralized money here in the U.S. And that was private money. There was literally banks and businesses had their own money. People had their own money. You used to have a gold coin in your pocket and you would snip off a little bit of gold, give it to somebody. Well, you were deciding what that gold was worth, nobody else. So it was private money. But once the government came out and said, listen, you're going to pay taxes whether you like it or not, and you're going to pay in our money, which means they had to give us the money. So they had to print it first, which shows up, unfortunately, in standard accounting as debt when it's not, and that's how they scare us. But that money then goes into our pockets, and then we use it to pay the taxes so the government can buy what it needs instead of us delivering a truckload of chickens to the Washington White House, okay?
Right.
And so, so we learned it's a much better, smoother system, and the government learned don't tax all that money back, and people will use that money. And right away, the private bank, the private type currencies went away. We didn't need the gold anymore. And we have a wonderful system. But the taxes did help make us actually use that money, whether we liked it or not. I agree with that. That might be artificial faith in our money. But today, I think most Americans would say, yeah, I'm going to continue to use our money. And the crypto, to me, is a bit strange that they want to take us back to individual money when it just doesn't have the guarantees. There can always be a U.S. dollar, but these cryptos can go away. So, so bottom line here is, I'm just worried more about the inflation. Don't pay much attention to the devaluation, because it looks like to me we've devalued forever, and yet we have more stuff in our lives than ever before. Life has gone on. But that inflation, when it gets negative, we're not a happy people. And when it's high, positive, we're not a happy people. So we need to learn to manage between what's two barbed wire fences, apparently.
Right. Yep. For sure.
I think the U.S. has done a very good job. We made it easy on ourselves by kind of becoming the world reserve currency, and we did. I must say that took some powerful people in the 40s, 50s. They got it done. They recognized the chance after World War II. Hey, we have we helped save the world, and boy, let's make the world ours now. And we've done that, but we're getting outdated now on that too. So, and this is what Trump's saying. He thinks it's outdated and trying to deal with that, but I'm concerned there again. It might be opening up a Pandora's box that it's just bad and breaks our system down. Okay, so I'm more worried. I'm not that worried about devalued. I want to keep an eye on inflation and deflation, but I'm also worried about all the political movements in this country right now. Currently, it doesn't seem to be interfering too badly with business, but I'm just concerned it will. So it will.
All right, Rich, talk a little bit about your podcast so people can find that.
Okay, go to criticalpointpod.com. Take a look at the site. There's some free things on there. There's locked up things. But as far as locked up, I know most of us in the industry of trying to forecast markets, talk economy, we give 2-week free trials. I always did it. I have a 60-day free trial. And I'm just convinced that give it that long, they're going to be with me for the rest of this decade or longer. And it's cheaper than most and yet more accurate than most, in my humble opinion. But I have a lot of people telling me it is. Why is it cheaper? Well, because I don't write newsletters normally. I put out a few things here and there, and I just talk the way I want. Don't worry about my grammar. I don't have a script to follow, okay? But I show people visually what's going on, and they can see these different types of signals. Oh, this is good. Oh, this is bad. And so give it a try, and you can cancel anytime anyways. And so criticalpointpod.com, and you can also email me, and you can even email me at rich@ag-financial.com. I'm still on Twitter somewhat, rich_Paasen, a little more these days under Blue Sky, and I think it's the same name, rich_Paasen.
Okay. Well, Rich, appreciate you being on the podcast. We'll catch you again next time. If we don't talk to you, have a Merry Christmas.
The same to you. Thank you very much.
All right, take care. Stay tuned for more Moving Iron podcasts after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a deer.
All right, welcome back to Moving Iron Podcast. Got Aaron Findle back on to talk about what's happening in the marketplace. Aaron, how you doing?
Terrific. How's everybody today?
I can't complain any. It's not too bad. I can't tell
60 in December.
Dude, I tell you what, it's 50 degrees right now. We're recording this at 6:30 in the morning on Tuesday. It's 50 degrees.
Yep.
Right now.
But last Thursday it was 60 by 60.
It was below. It was very, very cold. And now we're looking at almost 70 degrees by Friday. So we've got that going for us. It's going to have to go a long ways to get a white Christmas out here. So
here's what we know.
See what happens.
When that kind of stuff happens, it's just banking up for March, baby.
Yeah.
I would like to sell out and move for the month of March because I can just feel it coming. I'm surprised Sean's not on here going, man, if you're in the high plains, just get out of there. It's coming.
He said that before. So we're on our way. We're definitely on our way. Definitely on our way. Last week, before we recorded before our segment, before Trump came out and talked about how he's going to strip DEF and EPA guidelines off of machinery and going to make it cheaper somehow, and what that looks like, which that's great if that happens, that'd be all good. But the ripple effects from that, I think, in the used equipment market space are really catastrophic. I think is probably the best way to put that, right? It's like one of those things where, Twinkies taste good, but if you eat 10 of them, you're gonna get fat real quick, right? That's how that back end works, or a diabetic shock, one of the two. It comes to that, but I think the easy answer to this thing, and all manufacturers argue this, right? But you can go out and buy a Steiger or a an 8R or a 9R, or you can go buy a Magnum or anything you want. And there's a base spec. You go on online, you can build whatever you want to online. And there's a base spec out there, and that base spec says, hey, here you go. I've never understood why on the manufacturer side of it, they kind of, some of the manufacturers have done this. Case has kind of done it a little bit. Deere's done it a little bit, but on the loader tractor side. But I've never understood why they haven't said, okay, look, we're gonna take the trim package approach to farm equipment, right?
Yes.
So like you've got like an XL tractor, an XLT, a Lariat, so on and so forth, up and down the line. Or if you're a Chevy person, right, you got the Sierra and so on and so forth. As you go through that LTZ and whatnot, as you work your way through that as packaged up thing, because I as a guy that used to sell equipment, I would get drunk on the idea of, well, the more options you have, the better off it's going to be, because now you're gonna kind of have a catch-all there with when it comes back in the used marketplace that would allow for better resale value, so on and so forth, yada yada yada. Kind of find out there's really only about 5 to 6 specs that really matter on any piece of equipment. Where you're talking combines, tractors, 4-wheel drives, sprayers, whatever it is. Like there's 5 or 6 things that typically matter that will span the overall buying public, right? As you watch these things roll through and things happen, to me, if you came in tomorrow and said, all right, cool, we're going to take DEF off and do all this stuff, that's great. Whatever. That is what it is. But if they come back out with their baseline tractor and they drop it by $100,000 or something like that, the ripple effects of that into the use space are going to be a pretty big deal, right?
Oh yeah,
and it's gonna do a lot of damage. It's gonna do a lot more damage than it's gonna do good, right? And as you watch things roll through,
your Cherry 8430 just took a hit, whether you realize it or not.
Yeah, and the flip side of that too is if you take what's out there right now, as far as machines that are okay, we're going to roll back $100,000 worth of this or whatever else, you're going to throw a tear spec on top of that. So quite frankly, you're going to be right back to where you started at. Right. So I mean, ultimately, at the end of the day, it's this tariff thing is. I mean, I get it, but at the same time, there's damage to go along with it, right? So as you're watching these things roll through, I love the idea of, hey, we're going to try to make things cheaper so that we can help farmers be more profitable. And that's great. I think the easiest way to make things cheaper is you're going to bundle and package together. Hey, this is a base spec tractor. This is a work truck type approach to it. I'm not a work truck, but I'm not a Lariat. I'm an XLT type of thing, and that's as you work your way through that. To me, that's how you make farm equipment more reasonable for the buying public.
I love this topic. I love it. I have always dreamed of that. Like on my farm, my little pissant operation, I dream of someday we would own an 8E. Well, what's an 8E? Think you take an 8R50 and you put the old 15-speed gear shift in it, okay, out of the 55. You put the levers over here, and you can put all that. There's room over here, everybody. I've sat in the cab. There's plenty of room.
Right. Yeah.
It all used to be over there. It can go back over there. Something like that. And you get to where, and then you get your ILS, IVT, dual pump, ultimate visibility, ultimate comfort signature. That's your Denali.
Sure. Yeah.
Okay. But obviously they call it signature. You could go with signature. It's already on the door. But you have your signature, and that's just a click box. That's it. It comes with dual pump. It comes with 6 remotes. Make all that just boom, that. So then signature isn't 10, signatures 80. It's the package.
Right.
I personally, so do you, where are we at? The black and white cows and the black cows that stand in a row and eat all day. Feedlot dairy. An 8E would sell like hotcakes. What else would sell? An 8M.
And the thing about the
8M would be basically what we have now for your base spec 8R.
And you know what I like about the idea of having those trim packages? The reason I like that is when you go, because right now, if you buy an 8R from me right now, or an 8R 250, or you go buy a Magnum, whatever it is that you're looking at, right? I've got to take that.
But you don't work at a dealer, so if you buy an 8R from me,
if you had a, you got to take that serial number, and now you have to go research the serial number to see what the specs look like.
Yes.
Right. Whereas if I go buy an XLT pickup, the only thing that I'm really looking for is does it have the high XLT package, or does it have just the normal standard, the 201A or the 201B or whatever that is, that package in there that you go from the high spec XLT package or do you have the standard spec XLT package?
Yeah. To your point, like you cannot get a leather seat and a floor mat in the same pickup, right? You can't. I've tried.
No, I've done the same. Yeah.
I know Chevy and Dodge don't. I don't begin to look up that other company. Not interested.
That's the highest selling pickup in America.
Yeah. Thank you, gas companies. Fleet sales. Longest lasting, most dependable trucks on the road, Chevrolet. That's true. That's gospel. Anyway, here we are. There's only leather seat and floor mat, right? Okay. On a tractor, you essentially can do that. You can get ILS, IVT, dual pump, 6 remotes, high-speed IVT, every activation, worse lights, worse seat, worse cab interior.
Yep.
Like, well, I don't know what to do with my hands.
Right.
Like, what is that?
And that takes a lot of the guesswork out of what do I have, right? When I go to buy that. If I see, you see it right now, like the 6 Series tractor John Deere has, right? So you had, I don't know if you had a D, an E, an M, and an R, right? And you had all those models that went through there, and all those models had a different base, spec that you can only go so far with. Like there's only certain specs involved with each one of those, right? In order to get bail automation, you had to have an 8R or a 6R. In order to get something this way, you had to get into 6M. The 6D it's got 4 wheels and hydraulics to lift the loader, right? And that was really what it came down to, right? So depending on what you were doing and where you're at, that was the space, those specs. And I think it made a big difference when I could say, for example, you're going to go talk to a municipality, right? Mr. Municipality, when you're mowing your ditches, do you need bail automation? No, I don't need bail automation. No, I don't. Okay, how about this D series over here? Here's what we can do for you. Here's what it looks like, your cost per hour, blah, 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 blah. The next person coming in, that's what they're looking for, and it's got a good price on it because of how it's set up. But the consumer understood what they were buying when they went in to do that.
Well, and I feel like maybe, having been in this business long enough, I feel like maybe that's kind of been tried to a point. Like, well, for instance, that's what the hell the letters are. Just like you said, EMR, S and X. Those numbers all have a meaning as far as how high up the ladder we're getting.
Right.
But they're still so wide open within the letter.
Well, that's exactly right. That's what I'm saying.
Right, right.
You don't know what you're getting until you get that.
You don't have that. You're not going to have an LTZ Silverado without all the shit in it.
Exactly. Right. You're not going to have an LTZ Silverado with cloth seats and the old school rubber floor mat that goes from the gas pedal all the way to the back. Right. I mean, you're not going to have that. Right.
Right.
You're going to have some high end things that are inside that. You're going to have different kind of seat, like this seat over here. Now we got 21 points on this one and not 7. Like, okay, whatever.
Yeah.
Right. We got an extra button on the steering wheel now. Right. Oh, by the way, it heats. We have a heated steering wheel. Right. I mean, it's like this. I mean, a lot of these little things, that creature features that come into that, you can't get that on, even if you wanted to, even if you begged for it, you wouldn't get it on your custom pickup. Right?
No,
you wouldn't come that way.
No.
But when I go buy that, when I walk onto the lot and I'm looking at the LTZ, I already in my mind know basically what I'm going to get. Whereas on the equipment side of the stuff, like you walk on a lot and you're looking at it, like you don't know. Well, you can count the hydraulics. Does it have?
You don't know if it's got dual pump.
Yeah, it's got twin pumps. It's got triple pumps. Like all these different things that come with it. You have to look at the serial number to see all that kind of stuff. And now you should be able to go online and be able to see all that kind of stuff. But walking on there, I should be able to have a base in my mind. Okay, this is going to have twin pumps. It's going to have high flow hydraulics. It's going to have things that I need, that I'm looking for immediately by looking at it. I think to me that would really drive the price of equipment to a different spot. Now, honestly, God truth, even if you offered here's a level 1 entry level whatever to here's level 5 banger with everything on it.
Right.
I bet you'd still sell more level 5 bangers than you do anything else, just because of the way.
Absolutely, because the neighbor's looking. I was just thinking that. I was literally, when you started that, in my brain, I'm going, everybody's going to buy the Denali because the neighbor's looking.
Yeah.
They only need the Scottsdale, but they're going to buy the Denali because it's there.
To me, that's just
why is everybody overpowered on the farm? Because they can. Because they make it.
You're hearing some conversation now, though, that I think ushers this kind of idea into the fleet, where when you're still buying combines that were $235,000, $300,000, $350,000 combines, you're still buying $300,000 to $350,000, 300, 400 horsepower row crop tractors. When you're buying $400,000, big horsepower 4-wheel drives, hey, I like that idea where if I'm going to put 500 hours on a machine, I'll get 2 and put 250 on it, and because that's going to support the market a little better. Those little things, those conversations you're having, where I might have 6 or 8 tractors now. Instead, now a lot of conversations you're having now are like, I need 3 of those. I don't need 6 of them. Right. Maybe 2, to be honest with you. Maybe 2 is where I need to have it. Dad and Grandpa farmed the same number of acres with 2 tractors, and I'm doing it with 4. This is ridiculous. You're hearing that conversation, be having more, which I think opens the door up to this idea of, hey, we're going to kind of transpose what base specs look like and kind of group these in more to where you can have that. I want a base spec tractor, but I can get the higher end interior or something like that inside of that.
Well, to your point there, Casey, we'll say kind of mid-22 when you're starting to get a selection of the 8Rs online.
Mm-hmm.
Nobody would talk unless it was Signature.
Right.
Guy called, well, it's Signature, isn't it? Well, no, but it's got all the premium stuff. Well, I ain't buying if it's not Signature. Okay, so now we're 3 years later, 0 issue. 0. Like, it got it. I'm like, well, okay, now it's premium, so it's not Signature, but it's not the massaging seat, but it's like, what are you driving now? Well, I got an 8360. Well, it's way nicer than that. Like, that's kind of how I put it into terms. Like, guy, we got some dairy tractors. They sell like hotcakes. They're affordable, good options, but they're the select cab, which is the bottom option, right? And guys, like in their head, they're picturing an 81 Custom Deluxe with a vinyl bench seat,
right?
And you have that one air vent right here above the controls. That's it.
Yep.
That's what they're picturing. And I'm like, it's nicer than a 20 series ever dreamed of being. Probably a 30 series. Oh, well, I'm like, put it into real terms, like what are you sitting in right now? Oh, hell, it's way nicer than that, even though it's the bottom one, So to your point with, hey, maybe we don't need 5. We can get by with 3. Also, maybe we don't need Signature. We just need the right, the right stuff on it. We don't need every little thing. And back against the wall in the economy like it is, things shake out like that every time.
Yep.
Back to what started this whole thing, the death and guys, I wish they still made a 4955. One guy says that, and pretty soon, if you actually pay attention, everybody, after you get to about the 5th guy, no, I don't. Yeah, they were great tractors. I don't want to sit in that cab all day, I myself am 6'6". I only own sound guards, and I would love to sit in a big square cab.
Yeah.
Doesn't fit my budget, so here we are. It's just like the old square body pickups. worth more now than anybody ever dreamed they would be worth, right? I own one. I love it. I'll walk out there and kiss it. But I live 5 miles from town. That's far enough.
Yeah.
You know?
Yep.
I've driven that thing. I've driven to Chattanooga back numerous times. That's 50 miles. That is a God's plenty. You know?
Well, it goes back to that, and I've told this story on here a million times, but, you know, in the dealership, I used to watch those old John Deere Day videos, and there would be a guy in there, you know, and there would be whatever, you know, 1952, they're rolling out the whatever, you know, and the guy sitting there was like, this is the best thing. I don't know how they can make this any better. And there's sure as hell no way I'm going back to a 1940 something, whatever, to do the same thing. Right. You know? And it's the same thing, like to your square body pickup example, like you don't see a lot of 720s out working in the field right now, but you see a lot of them go down the parade line on the 4th of July parade. You know what I mean? Like that's the kind of stuff. And the reason for, I mean, and that's a really like dumb remark, but I mean, the reason that you don't see that is I sure as hell don't want to be sitting out in the field with no cab breathing dust all day long, right? You know, and I used to work with a guy that his parents had a custom run, and they were back in the day of old Gleaner combines when they didn't have cabs. He's like, the best thing about those combines was that as long as you were going, if you're cutting with the wind, it was the worst day ever. But if the wind was blowing behind you coming across, it wasn't all that bad. Yeah, it was. You just put the handkerchief over your face and you just go like, that sounds miserable. I don't know.
My dad did that.
You know? And I'm just like, I go, well, would you go back and do that again? He goes, hey, under no circumstances would I ever go back and do that again. You know? And it's just like that kind of stuff comes up over and over again. But back to the topic here. I mean, you're looking at how do you make that machine cheaper? Well, I think again, it's levels that you can step into. Old timer I used to talk to in the dealership when air conditioned cabs first came out. And guys were like, I don't need an air conditioner cab. I farmed forever. And then, you know, they're I'll just keep the door open. That lasted about 2 seasons. And then they were getting air conditioned in the cab, right? Because it just wasn't like you didn't have the airflow that you needed to have, right?
You seen Tom in town yesterday and he was clean. It was like 3:00.
And man, there's things like that. So as you start looking how these things stair step into that, I think the best way to combat machine pricing and how things roll together and is that bucketed groups of specs per machine all the way through. And you can go all the way from a base level machine all the way through, and you can have 4 or 5 or 6 different levels of trim of so forth, so on and so forth, and how they functionally work together. But at the end of the day, that's what's going to level out the price of machinery. Because I can tell you right now, if they came in tomorrow and Deere and Case and AGCO and New Holland and so on and so forth said, hey, you know what, we're rolling back our prices by $150,000 per base model, that repercussion in the marketplace, your balance sheet on the farm would be, wouldn't be $150,000. It'd be a lot more than that.
Well, yeah, it would be a very, very big impact.
It'd probably be 25 or 30% higher than the $150,000, right? So you're probably looking at $200,000 type of thing if that rolled back on those same machines.
For sure.
Now, because new sets the price for use at the percentage, right? So if there's a 5% price increase on a piece of equipment, it doesn't mean that everything is going to go up 5%, right? It means that a portion of that 5% is going to increase your use. It might be all 5% on a 1 or 2 year old piece of equipment, but as it trickles down, that piece of the new price increase changes. And I can tell you with inflation and everything else, if you rolled the price backwards, not only would you have just that part there, but with inflationary effects of the marketplace, it'd be even greater than that. So it's just like, no, I know this isn't what you don't want the price of equipment to go backwards because it's catastrophic when the things now. If they go backwards because of specs and machines, then that's a different story, right? That's a whole different thing. But if they start going, if you still have that baseline spec up here, that's the Denali or whatever you want to call it, that a lot of the equipment out there, 75% of the equipment in the marketplace is a really high spec machine. If that's still out there and that's still that's fine. You have this underbelly that you now can go back into and say, hey, look, there's another option for you that is not this ever. That option exists right now. You just have to be mindful of the specs that you're picking.
Right, for sure. For sure.
But the base spec, and I get it, the price of machinery right now is out of control. It's totally out of control. And that's a lot of things that come into play there. That's everything from manufacturer price increases throughout COVID and just a really
tariffs on supplies.
I mean, there's just so much there that drive the price of equipment. It's as much government regulation as it is anything else.
Right.
And that's the
hard to believe as that is.
It's a mix of both, right? It's manufacturer price increases and government regulation, right? That's the reason we have Final Tier 4. 2014, there's a 6% price increase in a very bad ag economy because of.
Here's your filter.
Yeah, because of that.
Or no, 14 was the juice.
That's right.
11 was the filter.
Yep. And so it's a combination of both, and hopefully they'll get that figured out. But at the end of the day, I think it's an easy way to combat the marketplace by setting up a standard for each level machine.
Right. Yeah. I think it makes it a far more streamlined approach for everybody. Manufacturer, dealer, operator, customer, everybody. It's a far more streamlined approach, and it seemed to work. Obviously, what on the equipment side, what they're doing is work for over 100 years too. But right. A nod to the automotive industry, I think, would streamline everything and give everybody a far better floor to base off of.
Yes. Well, great example of that. Machines out of the South are significantly less specs than machines in the North, right? You go down to Mississippi and you look at a tractor down there and it's barely got windows, right? Whereas you go up to Illinois, right, and it's got, if it could hover somehow, it would have that option, right?
Exactly.
So I mean, that's the dynamics and difference of the machinery there. But we as equipment people know that if you go to the South and look at a piece of equipment, it's going to be a low spec machine. That's just how it is. And you go north, we expect to see it. If you go to the north and see a machine that's spec like something out of the South, like, whoa, what's going on here? Why would you do that? And then it's complete a normal, but same thing on down south too. Like, holy crap, this thing's got everything on it. How's it coming?
Yeah.
That must be the guy.
I find that more surprising.
That must be the owner's tractor.
Right. Well, that guy didn't have hired men.
Yeah. So that's the, I think a lot of that is the scenario to pay attention to. So
for sure. That's
my 2 cents on it. I think if you look at where things are headed, more and more machines are going to be priced that way, but more and more machines need to go down that avenue. And if you can figure that out, that makes a lot of sense.
And my take on that whole, we're getting rid of DEF and all that. Yeah. Okay, great. Then what in 28?
Well, yeah, that's it.
Like it's coming. Blue wins. It's back. I mean, what? That's where we're at. So go ahead, pay whatever an hour to have all that taken off. Put it on the shelf, don't throw it away, and then in 3 years, 2 years now, you can pay to have it all put back on.
Yeah, I would imagine it'd be some kind of a grandfathered thing in there, but because, you know, at some point there'd be, but you're right. I mean,
it's not like we're 2 years into it, man. Tractors were last, right? Yeah. The green tractors were one of the last things in 14. Semis were already done. Pickups were already done. AGCO and CNH were already doing it by then. So, like, we're 13
all the off-road
years
stuff was a little bit different. All the off-road stuff had a different timeline than the on-road stuff.
Right. But, I mean, how many million of machines are we talking?
So now you're going to have those kits available to go get now to detier your engine, right? Or take off the...
Yeah, and what's the kit? The what's that kit cost?
And that's the thing. So you're really, at the end of the day,
new for 26, your detune kit. New for 28, your retune kit.
Right. Exactly right. But, they ship that stuff out of the factory all day long, down to South America, and South Africa, and everywhere else that are still Tier 3 engines. So it's not like it can't be done. But that being said, there are going to be, like you said, repercussions. What's that look like if I get ordered that way?
Right.
And then everything comes back in and that switches up. So if anything, it'll come that way from the factory, and then it'll be up to you if you want to take it off.
Yeah, good point. Yeah, I see that.
All right, man, that's probably a good place to stop. If folks want to reach out to you, get some information about what you're doing over at High Plains Wholesale, what is the best way to do that?
Well, the best way to get a hold of me is call or text 308-760-1193. You can catch High Plains Wholesale on Facebook. It has a Facebook page and a TikTok page, account, whatever. You can catch me, Aaron Fintel, on Twitter or X, Facebook, LinkedIn, pretty much everywhere. Or you can shoot me an email, afintel@21equip.com.
All right. Aaron, I want to thank you for being on the podcast this week. I also want to thank Rich Posson for coming on, talk about what's happening in the economy, as well as Greg Machinery Pete Peterson. So with that, I'm Casey Seymour. Let's go move some iron. Out.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.